They're very cool off the Dow Jones, and they keep on increasing their short positions. This is a perfect representation of what is taking place in the market. How's it going, fellow traders? Magic Trader here. And this is the CFTC report data analysis for the data that was reported on May 17th, 2022. Here's a brief snapshot of the positions held by the banks as of that date. And so, as we always like to start off, we will look at gold. Here's columns, long positions held by the banks, short positions held by the banks, total size. And what are we gathering from this information is that the banks, we'll get to the retail traders in a second, the banks were closing off long positions, reducing them from 288,000 to 283,000, okay? But look at this, big increase in short positions. And that helped price to drop, okay? Big increase in shorts, 95 to 107,000. Why is that important? Again, look. Take a look at this chart here. You see the big drop? Okay, that's what the banks are doing, increasing their short positions to cause this big drop. And then lo and behold, what do you think retail traders are doing? Remember we pointed out many weeks ago when price was back here, watch out for the rally because the banks are going to lure retail traders into getting long. Well, that's what took place. They lured them into getting long, and then the banks just reversed price and pushed it down. So retail traders lost a lot of money because they went long at the wrong time, and now the banks pushed price down. And so eventually retail traders said, okay, I'm going to take my loss. I'm just going to close my long position, and then I'm going to get into short. Well, where did they get in short? They get in short exactly where the banks are, pushing it down before reversing it back up. So now as the banks are pushing price up, we look at the positions held by retail traders, and it's mostly short, okay? Always the opposite of what's going on. Always. So, keeping an eye on what's taking place with gold. Last week we talked about the dollar and how we suspected that the dollar was going to drop. The only thing is that up in this area we are coming into an institutional selling area. This is an area that we would likely see a drop in price form from. Okay. So this is something going into next week that I will be paying attention to. Gold usually moves opposite of the dollar, and we can see that this big drop in gold and on the dollar was a big rally. We saw profit taking and a potential for a drop in the dollar, and now we're seeing the reversal in gold. Okay, correlated together perfectly. All right, so oil, what do we see? We've been talking about oil being stuck in a range for quite some time. It will be there for a long period of time until it eventually breaks out. Although gas prices keep on going up, this one's just ranging. I don't know how that works. Well, I do, but it's just how they even explain it to people is just crazy. Oil, we look at oil, look at the positions, 415 to 416, nothing big there, and they closed off some of their shorts from 104 to 90. So bottom line is long exposure is 82%, nothing special, nothing really to see there. So we will move on. The dollar. All right, so the dollar. Remember I told you they were going to start taking some profits and we were going to see a drop. Okay, look at what price did. It dropped. And isn't it interesting how we suspected that price was going to drop, and what do we see? An increase in short positions. So they increased shorts from 15 to 17,000, and they also increased longs from 49 to 53. Now, why would they increase longs? Well, because we're dealing with this candle here, this green candle. And so that green candle was a push up before the drop in price. Okay? So by looking at the sentiment of the euro, traders are mostly long the euro. So that means they're mostly short the dollar, which is terrible because the dollar has been doing nothing but rallying all this time. So you can imagine just how bad shape these accounts are, from retail traders just constantly adding short positions as price rallies. Just totally a nonsensical way of trading, but that is what is taking place there. Okay. All right. Next, we have The Aussie, here's the Aussie, big increase in shorts, 78 to 86. Small increase in longs, 36 to 41. And that comes as price was dropping here. Okay? With this candle here. Dropping, big increase in shorts. We have a downtrend. Price is reversing now, just as we suspected, based on the dollar profit taking and price dropping. So in terms of this, we see that 67% of overall exposure is geared to the short side. We also see that they're very aggressive with their shorts. They can continue adding, as we've seen back in December, 115s, 113s, and so forth. So they can continue adding, and we can continue seeing over the longer period of time a move to the downside. Okay. Short term, I do see more upside taking place on this chart. All right. And again, if you take a look at what the retail traders are doing, they are mostly long. Okay. As price is dropping, they are long. What are they thinking about? I have no idea. Price is dropping and they get in long. Okay. And what will probably happen with this rally is they'll start to get out of those long positions and then, or start getting in out of those long positions, getting in short as price continues to rally up. So be interesting to see how that plays out. Indeed. All right, USCAD. What are the banks doing? They're increasing their longs 35, 44, 50,000 and decreasing short positions. Why would they do that? Well, because the rally that we suspected was going to take place, and it did take place. Okay. Now we're contacting institutional supply at these highs. So we see a drop. Are we surprised of this drop? Of course not. Why are we not surprised at this drop? Well, because we said that the dollar, they were going to take profits. We're hitting institutional selling areas, and that's going to put pressure to the downside, and price was going to drop. All right, and so that's what took place. And again, you look at what retail traders are doing. They're mostly short. Again, but you can see that the slider is moving over to the left. It's becoming a little bit less short and becoming more bullish. Right at the wrong time. They're becoming more bullish after price is already at these highs. They're going to lose more money. That's plain and simple. So they don't follow us. They don't hear what we have to say. So that's what happens. They take the opposite side of the trades. US Swiss franc. They increased longs 20 to 21. A slight increase in shorts 4 to 5. No big deal. Look what happened when price contacted supply. Pa-boom, straight down. Okay. Big drop in price because supply came into play. This is completely forecasted before it took place. US Swiss retail traders were mostly short. Only now are they starting to say, okay, let me close these short positions and start getting in long. Yeah, it's too late. Now price is going against them, and we're going to see a drop in price. Whether it's going to drop this far, who knows? But there's going to be more downside is what we suspect. All right. Unfortunately for them, they are again losing more money. Euro, US dollar. Big increase in long positions, 228 to 230. Shorts, 211 to 210. What's going on here? Well, dollar hit supply. This hit demand, pushed to the upside. No surprise. It's exactly what we were suspecting was going to take place. And again, you take a look at what retail traders are doing. They're mostly long, and they're still mostly long. Okay, doesn't seem like that they've really closed their positions yet. So it used to be more long than what it is now, but they're mostly long as price was dropping. So they're losing. Okay, we suspect that we're going to see a short-term to potential medium-term move to the upside. So when I say that, what I'm talking about is there could be a move like this or even higher, potentially. So we'll see how things unfold, but we're definitely seeing more move to the upside in the days and weeks to come. All right. Pound US dollar. Look at that. Short, short, short. Look at that. So aggressive with shorts. You see that? So aggressive. And what are retail traders doing? The exact opposite. Why would retail traders be so long? When you can clearly see by the CoT report that, the banks were mostly short. And so what happened? Price drops. Okay. Are we surprised? No, we're not. Look at the huge drop. And where does it drop into? This green area. What's the green area? A buying area. So now you see price rally. No surprise here. We saw this coming before it even came. All right, so again, the same forecast on here is that we suspect there's going to be a short-term move to the upside, which has already taken place, which could become a medium term, which could become a more longer-term move to the upside. So keep your eyes on for that. US dollar, Japanese yen, dropping just like the dollar. And what do we see? Profit taking on long positions, 121 down to 114. Okay? Didn't we say profit taking on the dollar? You see how that plays out now? So again, suspect more downside is to come with a move short term to potentially medium term. Okay? And then we'll see how things unfold from there. All right, now we have the Kiwi US dollar. And the Kiwi we have, they're mostly long, okay? As price was dropping, are we surprised? No. Okay. Well, now they're starting to close their long positions and start to getting into more shorts as price is starting to reverse. So watch for this reversal. Watch for a bigger push to the upside because we suspect it'll be short-term, potentially medium-term move to the upside. And, you know, you look at the positions here, they are mostly short, but I think in the weeks to come, they're going to start to close off those positions. Okay? It'd be interesting to take a look at the S&P right now, because there's a lot of stuff happening with this market. You know, if you briefly look through the headlines, you'll see a lot of talk about the S&P 500, you know, how it briefly dips into a bear market. No. The S&P 500 is in a bear market, okay? And it has been in a bear market for a while now. And those who fail to see that are missing out on this opportunity to take advantage of this move to the downside. And that's what's happening. So if you read through the articles, you'll see a lot of articles in the Wall Street Journal specifically, and all throughout the other media sources, talking about a potential bear market. There's a lot of fear mongering out there about what's to come in the markets. There's a lot of programming happening in these articles. All right, they're basically trying to tell people, hey, this is the condition of the market, and this is how typically people think during this time. Well, is it really how people typically think, or are they telling you that, you know, people are typically thinking this way because they want you to think that way? I want you to think about that. Read these articles, go through the Wall Street Journal, look through these articles about the market and the fear-mongering that's taking place, and really pay attention to what they are saying in these articles, okay? So we see that the market is in a downtrend already. And if we take a look, you know, yes, the institutions are still mostly long. Shorts increased this past week, 52 to 57, but nothing really big. We're still, even though positions are the way that they are, we are still in a bearish market on the S&P. When we look at the NASDAQ, what do we see? We see shorts are more aggressive in terms of the coloration, okay? So we're matching current positions with previous positions, and we can see short positions are more aggressive than longs. Longs are cooled off. So even though institutions are holding 13,000 long, the 10 represents more of an aggressive move. I think the most telling, though, here is the Dow Jones. Because if you look here, I think this is a perfect representation of what's really taking place here. Okay? You take a look at here, 16, 18, 19,000 short. Okay? You see how aggressive that is? And take a look at longs, very cooled off. All right? They're very cooled off, the Dow Jones, and they keep on increasing their short positions. This is a perfect representation of what is taking place in the market. And we have a move to the downside. We've got, you know, a downtrend forming. The only thing that we got right now that we should be paying attention to is the fact that we have an institutional buying area that's coming into play. And now you can see a little bit more of a move to the upside that is taking place. All right, ladies and gents, so that is pretty much it. If you haven't liked and subscribed, you should do that now. Do that now so that you get all the future analysis coming at you when it is released. This is time-sensitive information, so you need to get the alerts. Make sure the notifications are set up so that you get the alerts when the new videos and new analysis are posted. Okay, that's it. If you want to learn more about how we do our analysis, reach us at www.whiteoakfx.com. Thanks. Have a great day. Take care.